Patrick Pouyanne, CEO of Total, welcome to Bloomberg.
Good afternoon.
Patrick, tell me this. What's the sentiment here at APEC 2019? Do you feel a bullish sentiment, the conversations that you're having, or is there a bit of caution?
Oh, in Abu Dhabi, where we are today, there is always a bullish sentiment about oil and gas. It's a country of oil and gas. It's the sixth largest reserves in the world. I think that, and at $60 per barrel, this country is okay. We produce in Abu Dhabi the lowest costs in terms of barrels of oil, so it's quite low. Mm-hmm. This is why, by the way, Total is the number one company. We love this country because it's really low-cost oil. And so it's so at $60 per barrel, this country has a good atmosphere, even if, of course, you can refer to the fact that the mood in the market is not too good, but here in Abu Dhabi, it's fine.
Okay, so you said $60 is sweet. I had Claudio Descalzi in the seat earlier this morning. He said 64, 65, and we had the Omani saying 60 to 65. So where can we move to on the upside if there's a trade deal, Patrick?
I don't know. I made only mistake when I try to guess on the oil price. By the way, for Total, my break-even after dividend is under $50. So I'm happy. I'm ready to see a price a little down compared to my competitors who dream to have a higher price. I'll be more resilient. No, but fundamentally, and it's difficult to answer. The volatility in the oil price, look to the last 12 months or 18 months, it's not +4, -5. It's +10 or +15, -15, Last year we had an average of $72 per barrel.
But do you think we're going to get that kind of volatility in 2020?
Yeah, we will get the same volatility. I think the market is, you have a very small amount. It can derive very quickly. The demand this year is not too good because of the macroeconomic trends, the trade wars. So we see an impact on the demand, and there is a global feeling. People are a little worried globally, even if financial markets are pushed up by the low interest rates or negative money,
Did trade wars really hit your demand level this year? Did it come through in the numbers?
It's going through numbers. The increase of demand is revised month after month by the International Energy Agency. It was 1.4 plus 1.4 million barrels of oil per day beginning of the year, plus 1.3, plus 1.2, plus 1 today. I think we'll end under 1 million barrels of oil per day increase of demand because there is less demand because of less economic growth. There is a direct link. So the demand is on that side is a little weak.
So you're not inclined to give me a price on the upside, but where could the floor be for these prices this year? Let's trade that side of the market.
On this side, I think there is an element which has to be taken in account is the OPEC policy, and we know that the OPEC policy is quite clear. I think OPEC countries want to have a price above $60 per barrel. They have made the caps, so they have been very disciplined. Saudi Arabia in particular has a key role. Russia joins the group. So my feeling is that OPEC will react if the price was going under $60 per barrel. But they have no influence. On the other side, you've seen, look, this market is strange. You've seen an attack, the major attacks in the history on Saudi Arabia facilities, and we see a rise of the price of the oil price only for 2 weeks, and then the price went down again. So that means that, yes, there is a weak demand, there is quite a big supply, and so this is the balance of the market, and OPEC is playing a good role.
Okay, and we'll see what they do at OPEC when we go to Vienna in December. You were never a buyer of the shale trade, that euphoria in shale. That leaves you slightly vindicated?
Why vindicated? By who? No, we never believe, honestly, about it's a question of strategy for the company. We prefer to bet on our strengths, which are deep water, which are LNG, and we have made quite a lot of deals to continue to reinforce and to grow into a strengths area rather than trying to fill their gaps. And secondly, I never believe in the history of flexible capex, short-term capex. It's not true. By the way, our peers who are investing today in shale oil, they demonstrate that they need to commit for quite heavy capex program. And all this story about it was a sort of rush for the new gold. You will drill a well in shale and you will make money. Unfortunately, it's a little more complex than that because the decline is quite strong. And so private equity people, and today there is a reverse feeling about shale oil, and people say, okay, it's not a matter of volume, it's also a matter of return, cash returns, and so we see the impact.
And so there would be nothing, for example, in the valuations, if I said to you Occidental would be an option for you to consider buying?
Forget all that. We'll never do that. By the way, we made a deal with Occidental. We bought the African assets of Anadarko. We didn't
Very
buy
smart deal, they say.
We didn't buy Anadarko. We didn't buy. No, Total, we have a clear strategy. We'll stick to our strategy, which is we maintain a discipline on investments. We spend 16 to 18 billion per year. We are still mainly focusing on LNG. We became the number 2 liquefied natural gas player in the world. And we also spend 10% of our program to grow our low-carbon electricity and renewable business. That's the strategy, and we'll stick to that.
What about renewables here, Patrick? Do you intend to do more in renewables here? You have a small.
No, we are not small. We are the largest among the oil and gas players, in fact. Today we.
But what about renewables? I would just want to get into renewables here in the region.
In the region, we are looking to that seriously. I think it's, but we need to have big farms. We have not been so successful until now in tenders, but there is a tender here in Abu Dhabi coming from 2 gigawatts, and we will participate and be aggressive. We'll look seriously to Saudi Arabia as we look to Qatar as well. So we are willing to establish a position. Now it's a question of profitability and the capacity of understanding. But we become better. We will see. Our ambition, we announced that we want to have 25 gigawatts by 2025. So we will be more aggressive in all this renewable business.
On your own or in joint ventures?
In joint ventures.
In joint ventures.
We like joint ventures, like in oil and gas. I like to share the risk, It's good to have our teams being challenged by another company. We don't know everything, And so we will partner with some good companies who are deeply involved in renewables.
Let's talk about the Aramco IPO. A $2 trillion valuation gives me a yield of 3.75%. You're targeting 6%. So my question is, institutional investors, are they really going to be interested in this at 3.75?
They will answer. This will be the answer of the market. There is a market. They want to make an IPO. We'll see. By the way, we don't target 6. We prefer 5.5 and a better valuation of my shares. So let's be clear. The yield is depending not only on the dividend, but also on the shares. So I would like to see the shares of Total going up a little.
I think probably all shareholders would like that. I'm going to push you a little bit on the valuation because it's quite ridiculous, some say. 1.1 through to 2.5. What do you think is a fair value?
No, I will not answer to that because, I think it's a question of marketing. It's a question the market will answer. Again, it's an IPO. I think you can make the math according to various publicly listed companies, but I think Saudi Aramco is a fundamental different animal. It's a huge oil and gas company, huge resource. It's one country. It's a clear policy. So it's very difficult, I think, to try to find what is the valuation that the market will give to Saudi Aramco from what is Total or Shell or Exxon. So let's look and see. We will have the answer soon. So don't guess. I think it's let's trust the market.
What's the biggest challenge for Amin Nasser when he turns to run a public company from a private company?
Honestly, I think Amin is a very experienced CEO. We speak about listing 3%, I think. I'm not sure it makes a lot of difference, between 97% and 100%. At the end, it will still be a company largely governed by the kingdom. And I think the kingdom will be the master of the company. So,
does that restrain the valuation, in your opinion?
Probably. Again, the investor will tell you, but probably. Like for any publicly listed company which is dominated by the state majority shareholder, like in France, there is generally that is taken into account by the market. But let's see. Honestly, there is no precedent. We've never seen such a huge company being listed, so it's difficult to anticipate.